Well, time to dispel some myths about FDIC coverage. I just saw a headline from somebody. Well, I'll show it to you a little bit about FDIC coverage will end. And here it goes. FDIC stops offering 100% coverage for all insured deposits January 2013 from Pastor Dowell, I think it is. Well, you can look at the PastorDowell. Now, I'm going to say something about this because that's a very misleading headline, in my opinion. Okay? That's not exactly what's going to happen. First off, there's nothing going to expire as far as FDIC insuring deposits up to $250,000 limit. That's not changing at all, one iota. What's coming, and I'm going to say something else because, I'm not going to say what I bill at or anything like that, but, people say they bill at $200 to $250 or $300 an hour. They're not going to be on YouTube telling you a whole bunch of stuff unless maybe it's as a sideline, possibly. They're not going to go into a bar and argue with people back and forth points. They look for money. People are going to pay them major fees, right? That's what they do. So beware with the information you get on the internet, big time. This is right off of Wikipedia for one, and you could say Wikipedia is not the best source, but I like putting it down here because, well, in a lot of cases, it's just plain common sense. It's middle of the road, and I know they don't. Well, let me just get on with this. The whole thing is, let me get back to this tag. On 12/31/2012, the Transaction Account Guarantee Program will expire. That's if it's not renewed in some way, too. That's another thing. There's a lot of things that are going to expire at the end of the year or in January or possibly may be extended up to April 2013. That's collectively known as the fiscal cliff. But this Transaction Account Guarantee Program doesn't have anything to do with the FDIC guaranteeing deposits up to $250,000. And I'm pretty sure that most people on YouTube, or most people actually in the whole country, don't have cash deposits over $250,000. And if they did, just split it amongst a couple banks. If you got, $4 million, use yourself a dozen banks, okay? I mean, really, you're still covered, right? TAG means unlimited insurance for all, unlimited, goes beyond the $250,000 limit for all non-interest bearing transaction accounts. That's meaning non-money market accounts. So, just to get a little bit on it, see, this was from PastorDowell. So, I don't know I didn't even watch everything he says, but I saw that title and I saw a question pop up about the FDIC insurance expiring. No, it's not expiring. And I don't even know if this is going to expire, but it's actually related to the Temporary Liquidity Guarantee Program. It's a program adopted by the FDIC Corporation on October 13, 2008 during the global financial crisis of 2008 to encourage liquidity into the interbank lending market. And if you go down here, Transaction Guarantee Program, this is what may expire, but let me show you how many times it was extended too. The Transaction Guarantee Program, as described in interim rule, provided a temporary full guarantee by the FDIC for funds held in FDIC-insured deposit institutions in non-interest-bearing transaction accounts above the existing deposit insurance limit, above the $250,000 limit. So that's what may expire. But look what happened. This coverage became effective on October 14, 2008, and would continue to December 31st, 2009. And then in 2009, the FDIC extended Transaction Account Guarantee Program for 6 months through June 30th, 2010. The guarantee was then extended an additional 6 months through December 31st, 2010. Thereafter, Section 343 of the Dodd-Frank Wall Street Reform Consumer Protection Act provided for the next 2 years up to December 31st, 2012. They might extend it, but this has to do with non-interest bearing accounts that are above for the amounts above 250,000. It has nothing to do with the FDIC insurance on 250,000. Now that's a whole other subject. I mean, if all the banks failed at once, we're screwed. The FDIC ain't gonna cover that. It's like trying to piss in the wind, you know. And here's Ben Bernanke, his relative probably. You know, it's akin to how Ben Bernanke's trying to hold the whole system together. He's got all the parts here, you know. How the hell do I put this whole damn banking system back together again so everything runs real smooth? But actually, in a way, a lot of things are running smooth in some ways, as far as you're not going to see the dollars themselves disappear, where you're going to lose out your money in the bank. But you could see the value of your dollar diminish greatly. So that's why I'm in gold and silver and all that type of stuff. And if you can have farmland, and if you can have marijuana farmland and it's legal and grow that stuff, more power to you. And then, so this was from PastorDowell. FDIC stops offering 100% coverage on all insured deposits. I don't see how that title fits in even what's happening with the expiration of tag. Then he puts down a reference down here, and it's to this guy's blog. See, this is where I'm saying you have danger in the web. That's one other reason I make way less money on silver videos than I do on health videos or car videos. That's why I don't know if I want to do these as much. But when I look at these things, these different things that are out here on the web by these various bloggers, I have to comment. So, you know, this was more my background. And I'm looking at somebody writes a blog here, and I don't know, this is not, what is this, from the SD Bullion, or I don't know what this is from. Well, it's Poor Richard's blog spot. So he's talking about, you know, this is where PastorDowell got his information from, and he went that, you know, you can read this. I'll post a link. I'll post a link to PastorDowell, but I'm telling you the reality behind it is not that. It has to do with tag is expiring, the transaction account guarantee program. It may, right now it's set to expire in 12/31/2012. But that has nothing to do with the $250,000 limit. Nothing. Now, here's something if you want to look up your bank to see what the asset ratio is. I don't know. Last time I looked up New Jersey. Go to Florida here. Florida, work. Damn it. Internet, fly. It's probably not going to work. But anyway, the thing is, yeah, probably my wireless crapped out. But you can look it up by just clicking on the state. But if you look here, for instance, you know, if you have a failed bank, hometown community bank, you'll have an acquiring bank. So a lot of times you might have two acquiring banks. You might have one that acquires the deposits, one bank acquires the loans, that type of stuff, you know. But here it says no buyer found. The FDIC will make payments to insured depositors, and that's up to $250,000, and that is not expiring on 12/31/2012. It has to do with the tag program. Now, you know, my wireless just crapped out right here, but you know, I'll get that back on in 2 seconds after I finish this video. But just want to point out, be careful of the information you get off the internet. And I'm going to post where the link is. You can look up the bank. I was going to show you how to do it, but it's real easy. You click on your state. You click on your town. You can look up the name of the bank. And it tells you the troubled asset ratio. So it tells you what the national average is. And if your bank is above the national average, that doesn't mean it's going to fail. It's usually, well, you don't want it over 50%. But usually when it gets up to 90% or so, man, that's really dangerous shit. So if your money's in that bank like that, and it shows a trouble asset ratio of 90% or above, yeah, you should move it out. But you know the deal is, like I said, even if it fails, the FDIC pays out. They pay out. Now, what I think, you know, where the problem is, if you're having all your assets in fiat dollars, you're probably going to lose out because, you know, I know the inflation rate and the price index, whatever you want to call it, hasn't been rising too much in the last year, and same with gold and silver. It's been staying pretty flat. But I think that's about to change. I think that is about to change. We're just, you know, like we had a little rise up in the silver and the gold from like the summertime. Now it's kind of like stay pulled back a little bit, staying kind of flat. You're in boredom, doldrum territory on the gold and silver. Watch, it'll start taking off again. It's almost like the same psychological game that was going on with people in the summer. But just to finish this up as a summary and to review again, FDIC is still insuring deposits up to $250,000. That's not expiring at all on December 31st, 2012. What is expiring is the TAG program, Transaction Account Guarantee, which has to do with non-interest bearing accounts that are above the amount of $250,000. That was being insured from 2008, but it's been expended, so they might even extend that. So if you got more than 250,000, hey, you know, no problem. Now the thing is, like I said, you could just use separate banks. The 250,000 limit's fine, so beware what you see on the internet. And I'm going to keep commenting. Like, I don't have like a million initials after names. I kind of don't like people like that, but I do know what I'm talking about pretty well. I just read stuff, and I try to read in a more responsible manner. And as long as there's people on the internet saying things that are outlandish, I'm going to keep commenting on this.